Okay, so my name is Gabriel Agofuri. I'll be the host for today's webinar. And as we all know, the topic for today's webinar is decoding Nigeria's new tax rules in relation to funding and also strategic choices for founders in the new reset era. So I'll just be doing like a brief introduction of what we're about. That is the company that is hosting this webinar, Midridge International. Then also, I'll be taking you through some of the things that we'll be looking at learning today, and I'll also be introducing you to some of our special and wonderful speakers. I don't know, should we give like okay, I think some people are still joining in. Maybe we could just give like a minute to.
Please go on.
Okay. Let's go on. All right. So just a brief about what we're about, Midridge. So Midridge International, we're a Pan-African strategic consulting and financial advisory firm. We empower businesses to transition from lifetime to legacy. We also address critical challenges from financial inefficiencies to governance gaps to talent management and long-term sustainability. So basically, we are just this all-in-one package that helps you drive your business to make sure that it goes from one lifetime to another. That's transferring legacies. Also, we help with strategies that help you boost revenue and also basically just help your business gain sustainability. So that's what a brief summary of what we're about. Then just moving in to what we're here for today. So we'll be talking about the new tax rules. As we all know, there's been a memo that has been circulating for a couple of months now about the new tax rules and what they mean basically and how they are going to be implemented starting from January 2026. And as we know, Nigerian businesses landscape is changing rapidly with these new tax reforms, rising capital costs, and also an economy pushing founders to rethink structure and sustainability. So today, what we want to do, we want to unpack how these shifts will affect our businesses, moving from compliance and to funding and to long-term strategy. So basically, we're just going to help you, put you through, give you various strategies that will help your business thrive in 2026 and beyond. So I would like to introduce our first speaker. Um, we'll be introducing her. She's a very, very wonderful person with the name of Olubumi Kuteyi. So I'll just be giving you a brief about her profile. I'm sure that by the time she comes up, she'll be able to talk more about what she's about and what she does. So Olubumi Kuteyi is a visionary and result-driven tax professional with over 17 years of experience in the tax advisory, compliance, and strategic tax planning initiative. She is a member of ICANN and also a member of CITN, which is the Chartered Institute of Taxation Nigeria. She's also an associate member for the Business Recovery and Insolvency Practice Association of Nigeria, and she holds a bachelor's degree in accounting and finance. She's a partner with Creston Padebo Professional Services, a leading professional service firm in Nigeria, and she also serves as a member of the Taxation Fiscal Policy faculty of the Institute of Chartered Accountants in Nigeria. That's very wonderful. So I would like to bring her up so she can just give us a brief and just basically discuss some of the things that we want to highlight during this webinar. Thank you very much, Mrs. Olubumi.
Thank you very much, Gabriel. Good afternoon to everybody on the call. Thank you. And first, I think I must appreciate Midridge International for inviting me for this session this afternoon. Okay, I think Gabriel has done the introduction. No need adding to that. So I guess we'll just go, straight into why we are here for today. That's the big. I'm sorry. Let me just see that I'm connected properly. Okay. Yes, great. So that's the big elephant in the room. For now, for businesses and also for individuals. I'm just going to start sharing my slides so that we can just get right into it. The new Tax Reform Acts, how do they affect me? In fact, there have been a lot of questions around this. Please, when my slide comes up, let me know. Okay.
It's up now,
Please,
ma.
can we all hear me? Oh, it's up, great. Thank you. Let me just put it on slide mode. Okay. Just a bit. I'm trying to ensure it's on slide mode as presentation. Okay, thank you. Hope it's still up. Is it on slideshow now?
Yes, it is.
April, please. Okay, great. Thank you. Thank you.
Not yet, not
Yes.
yet. Not yet.
Oh, not yet.
Yes, I don't know, maybe it's only
Okay.
me. Am I the only one that is not seeing it on slide mode? Please go ahead. Maybe it's just
Please
me.
just give me a moment. Let me just ensure that it's done so that it's easier. Okay, just a moment. Let me just reshare. Apologies. Okay, so it's on slide mode now.
We can't see it yet.
Or you can see it yet. Because we don't have issues with this today. Okay, I guess I'll just go right ahead. So yes, I know we are all aware of the buzz about the new tax rules. As is being circulated within the Nigeria, within Nigeria for some months now. Sometime in June this year, the president has signed in the 4 tax laws that pretty much will be governing what we will be doing when it comes to taxation from next year, January 1st of January 2026. Okay, so and that's what I'm going to be speaking to in a couple of minutes. So what has changed, right? What has changed? What is the new rule? How does it affect my business? How does it affect me as an individual? How does it put me in a better place? Okay, in fact, I've gotten a lot of comments where some clients or business owners have thought, oh, all the strategy that we put together to get to where we are, it seems this new tax rule is throwing everything into under the bus, and it's either we are starting again or we go down. But then I also observe that to a very large extent, there is still a huge knowledge gap for a lot of people. People are just kind of taking comments, off what they see in the news, but then you're not very sure of how exactly does this affect me. So you never can tell. You may, in fact, be in a better place, especially if you're a small business just coming up, or even an individual who earns less than 20 million in a year, right? So for those category of people, it's better. And even for big businesses, right? There are some tax reliefs that have also been introduced. Okay, so I think it's just a question of understanding what has changed and how do I position myself to ensure that I take benefit, right? And that's what we are going to be talking about today. So like I said, 4 laws in all, and I'll be speaking to majorly what has changed. I know the 20 minutes I have certainly will not enable me cover as much that has changed under the tax laws, but as much as possible, I'll try to just hit the main points, and then we'll take questions. I hope we'll be able to cover much that way. So, but if you would indulge me, please, on the group chat, it would help me if you can just put in there, do you have a business, if it's registered as a limited liability company or as a non-corporate? Okay, maybe just a bit of what category you fall, so that as I'm speaking, I can also address examples that can help you, or instances that can help you help your business. So I would appreciate that is being dropped in the comments in the chat box while I go ahead. So thank you very much. So yes, 4 laws, the Nigerian Tax Act is the first one, which is the main one, right? And that tax act pretty much, consolidates all the tax laws before now, or at least we have the Companies Income Tax Act. Oh, I'm still on course.
Yes, sure.
Okay, great. Thank you. So we have the companies income tax, personal income tax act, capital gains tax act, stamp duty, VAT, so a lot of tax laws isolated individual. Then the third one is the Joint Revenue Board Act. Yes, you may not have so much to do with this, but essentially this just speaks to how the tax authorities can come together to collaborate. Let me also mention that one of the things that's been introduced is that unlike what we currently have, where each of the tax authority are isolated, they stand alone. So if you are an individual, you're resident in Lagos, Lagos State taxes you, okay? If you have a company, the Federal Inland Revenue Service taxes the company. But going forward, what they are looking at doing is to also ensure collaboration. So Lagos State can give the Federal Inland Revenue Service some information to say, oh, this person actually, incurred this much in staff costs, because these things have a way that they connect or they sync. And I think as we proceed, we will get there. So the last act is the Nigerian Revenue Service Act. So now I will be speaking to the changes. Wow, let me just take this. My God. Hope my slide is still up. I'm trying to ensure that I'm on slideshow. Please, Gabriel, help me confirm that my slide.
Yes, I can see the slides.
You can go on with the slides without the slideshow. Let's just move on. It's fine, we can see it.
You can see it clearly. Okay, thank you. Okay, so the first one is the harmonization, like what I just spoke to. Then also there have been some obsolete tax laws. In fact, there are provisions that have been enacted since 1839. Okay, so laws that have been completely obsolete. So all of those have been changed. So some of the things you need to know, right, essentially, as it affects your business. Companies income tax. If you have a company, I don't know if I have any comments in the chat box based on the question that I asked. Okay, so somebody, I can see comments, thank you. Somebody says, I have a business registered as business name. Okay, limited liability, a law firm. Okay, great. So I see we have a mix, So yes, going forward for the limited liability companies, the tax rate on your profit used to be 30%, right? Up to the ending of this year, and it's going to continue that way from January next year. Okay, so nothing has changed as regards to the tax rate, though the base that is being taxed to an extent is being moved around, right? VAT, value-added tax you charge on the service you render, goods that you sell, if they are VATable. So that still remains at 7.5%, right, on whatever you are earning as income, if it is liable to VAT. So yes, that also has not changed. So one of the areas that has changed is the Personal Income Tax Act. Okay, so currently the tax rate ranges between 7% and 24%. If you're an individual, you're resident in Nigeria. Let me first also mention that if you're a resident in Nigeria, your global income is liable to tax. So whether you have salaries coming in Nigeria, or you have investment income coming in from any other country, or you have properties abroad, you have rental income coming in, whatever that may be, as long as you're a resident in Nigeria, your worldwide income is liable to tax. We are shifting from between 7% to 24% range to 0% to 25%. So I know most of us must have been hearing, the the buzz about, oh, tax rate is going to 25%. So not exactly. Right. So for people in employment, or even if you're not in employment, just have your income coming in. And also people who have businesses registered as business names, because such businesses are seen for tax purposes as the same as the owner. All right. So your business is seen as the same as you if it's registered as a business name. Okay. So all of those will fall within this category. Self-employed, individuals who are in employment, your tax rate now ranges between 0% to 25%, right? If time permits us, I'm going to show us the graduating table. So on the average, depending on the income you earn per annum, for people who are on annual salary or income of 20 million naira and below, in fact, they are, going to be getting better when it comes to taxes. Your taxes are going to be reducing, right? If your income is within 20 million and below in a year. But for everybody who has above 20 million, there's going to be increase in tax payable from January 2026. So another thing that has changed is around capital gains tax. So a lot of people have been concerned about this. Currently, capital gains tax rate is 10%. So if you dispose of an item, for instance, maybe you dispose of your shares, you dispose of a property, capital gains tax is 10% on the gain that you made. But from next year, January, that is going to be, now consolidated with your income tax. So what does that mean? For companies, you are going to be paying capital gains tax at the income tax rate of your business. So I mentioned it, income tax CIT rate is 30% for companies. So which means that instead of the 10% that is currently obtainable on gains, from January, it becomes 30% on whatever disposal a company makes from January 2026. So yeah, a bit of concern for companies. I've had cases where companies have gone to quickly sell shares, right? So if you have huge assets that on a normal day you just, would dispose, make gains, some companies have gone to say, wow, if I don't dispose this thing before December so that I can pay 10% in CGT, if I leave it in January, that becomes 30%. So businesses are weighing their options and, making decisions before the end of this year. So that's for corporates. For non-corporates, your CGT will now be paid at the rate of your personal income tax. I mentioned earlier, personal income tax ranges between 0% to 25%, which is kind of a range. So wherever you fall, that is where your CGT will also fall, as against the 10% that is currently obtainable. So yes, another plus is from next year, any company that makes a loss will no longer be taxable. So currently, there is something we call minimum tax, right? So in a case where a company makes losses, at least you must pay a minimum in taxation. So that minimum tax rule is now being scrapped. So if you make a loss, then it's loss. As long as it can be defended, then it's a loss, and then you can move on. So companies who make losses are no longer expected to pay minimum tax, right? So now for small companies, currently the threshold for small companies, we all know that small companies are not liable to tax in Nigeria, and that was from the Finance Act. So the companies that are classified as small companies are small companies with an annual turnover of 25 million naira, right? So now that threshold has been increased to 100 million. So if your business makes 100 million in turnover, now I'm not saying profit, I mean the income. So you buy and you sell or you render services, and by the time you aggregate your income, it comes to 100 million. That means you fall within the category of small business and you're not liable to pay tax in Nigeria. So there is a bit of twist that's also been added to that. So if you are claiming that you're a small company, your asset base also cannot exceed 250 million naira, right? So that also needs to be taken note of. So if you fall within this category, you're not expected to pay tax. However, you still have obligation to file your tax returns for you to be able to claim this tax exemption. So in addition, for small companies, they are not expected to charge VAT or file VAT returns. So that's a lot of good news still for small companies. So they only would be filing CIT returns, but for VAT, they're not expected to file returns or charge value-added tax on their services or their income. Okay, so the ninth one we have. Hello, can we still hear me?
Yes, somebody tapped your mic. Go on.
Okay, great. So another plus for businesses is that businesses can now claim the input VAT they suffer on their cost. So how do I mean? You incur costs in a particular year, maybe you've paid your tax consultant or you paid auditors, and then they charge you VAT. Currently, that is not allowable for tax claims in Nigeria. But what the law is saying is that if, for instance, you pay your auditors maybe 1 million naira, they charge you VAT at 7.5%. That whole amount, right, currently used to be expense for the purpose of CIT. So the law is saying that the 7.5% that you've paid to that auditor as VAT, you can now recoup it from VAT that is payable on your own revenue. I hope I'll have a bit of time to explain how that goes. So let me just describe it because it's something that is key. So if, for instance, I'm a tax consultant, I earn income in fees, I bill my clients, and I charge VAT at 7.5%. That VAT I charge is called output VAT because it's VAT charged on my output, what I put out, right? So the government expects that 7.5%, I'll just collect it and then remit it to the tax authority. Okay, so that's what is obtainable currently up until December. So what the law is now saying is that instead of me taking that 7.5% and giving it to the tax authority as VAT that I've collected, government is saying, okay, I also want to check what VAT have you also paid out? So if you paid any cost in form of expenses or fixed asset, maybe you bought, furniture for your office and you paid VAT to someone else. Government is saying the VAT you have paid, remove it first from the VAT you collected. So now is the net I want you to give to me, right? So that is a good one for businesses. Another addition is deployment of technology. Gabriel, please prompt me so I'm, sure when my time is almost up so I can jump and
No problem.
Okay, great, thank you. So now deployment of technology, I know you probably must have been hearing about e-invoicing. And I must say this is going to be a game changer for a lot of businesses in Nigeria. So currently, the tax authority would depend or rely on the returns or information submitted by the taxpayer. So every year, like I said, you're filing returns. So what you are pretty much doing with that returns is to say, oh, this year I've made annual turnover of 100 million. I incurred a cost of 80 million. Tax authority see my profit is only 20 million. And that is what is liable to tax. So that is what currently obtained. So whether that 100 million that I've declared is correct or not, the tax authority can now come back later to say, okay, give me invoice, let me check. Give me that, let me check. Give me this, let me check. Going forward, that will no longer be the case. The government is saying that there's going to be technology deployment to the system of every business in Nigeria. Now they've capped it at businesses with turnover of 5 billion naira and above annually currently. So those are the ones that are being focused on. But ultimately, we are going to be getting there. And this would mean that once that technology is deployed, all your invoices have to be electronic, right? So you are e-invoicing, and then it is passing through a platform of the tax authority. So if you pass through the tax authority's platform, so they have record of the income or the invoice that you raised, right? Before it then gets to your customer. So what that means is that the tax authority can readily collate your annual revenue, whether or not, or before you submitted your declarations or financial reports or returns to the tax authority. So pretty much there is going to be a mirror of whatever you're doing in terms of invoicing or, you know, transactions within your company. The tax authority will be, you know, having a mirror view into all of that. Yes, so the next one is the requirement for banks to now request for tax identification number from taxpayers, from their customers, I mean. So what does that mean? You enter. So now I'm not very sure of how they intend to implement this, but on the face of the law, banks now have obligation to request for tax identification number from customers. So you enter a bank, you want to carry out a transaction, or maybe you have an existing account. It means the banks would now request for your tax identification number. So that means anybody who is not registered for tax is at risk, okay? If you're not registered for tax, you are at risk. And in fact, there is also a recent provision that now empowers the tax authority to generate or open or issue a tax identification number for you, whether or not the moment they know that you exist, right? Or maybe they track by whatever means, they can issue or generate a tax identification number for you without your consent. Okay. And yes, I know the banks will have to be instrumental to a large extent in getting most of the information the tax authorities will need. So as long as you have a bank account, it's important that you ensure that you regularize in terms of your tax obligations. Okay. Yes, so this is another good one, tax exemption. So currently, when you invest in FGN bonds, I know most of us probably may know that that is tax exempt. So you investment in FGN bonds, you earn interest, you know, you may even dispose at times, you make gains, all of that exempt. So now the state government bonds have also been added to that. So if you invest in FGN bonds, state government bonds, they are all tax exempt. So these are areas you may want to leverage in terms of your investment. Yes, so an office has been set up called the Office of the Tax Ombudsman. And what this office is supposed to do is to, you know, just try and mediate between taxpayers and tax administrators. I can promise you that with all the changes, you know, that we are seeing in the tax laws, there's going to be a lot of tax disputes starting from next year. Because as a taxpayer, I would want to interpret the provision of the law, you know, to the best of my advantage. Then the tax authority probably may also come from this angle. So until things stabilize, there may be a lot of, you know, back and forth in terms of disputes between taxpayers and tax authorities. So this mediator, right, which is the Office of the Tax Ombudsman, is supposed to help to an extent with that. And also, you know, at least you avoid cost of litigation and what have you. 14 is speaking to attribution for VAT purpose in filing our returns. So currently, everybody just file returns. I know, yes, we probably would have heard about the buzz when the state governors forum were fighting you know, just contending the provisions when the presidential committee had just issued recommendations around how VAT should be shared, VAT sharing formula, and all of that. And all of that is because, you know, once I file VAT returns in Lagos, is attributed to Lagos. But meanwhile, if my returns does not show, because VAT should be allocated to the jurisdiction of the consumer. So if I've made income, for instance, banks, they have branches across the country. So if the bank in Lagos, head office in Lagos is making returns to the tax authority, it just files it as Lagos. And then Lagos get benefit. What happens to the transactions that happen in Kano and other jurisdictions? So what this has done is to ensure that when those returns are being filed, there has to be attribution, which is just a schedule that shows that, oh, this much income that I've made, this customer that paid me this is coming from Kogi, this one is from Kano. And that will just help a bit with VAT sharing formula or sharing or appropriation. Disclosure of tax planning. Also, I'm not very sure on how this will play out, but based on the provisions of the law, right? If you are, putting together maybe a tax planning scheme or strategy, now the law says that you need to make a disclosure to the tax authority. So how do I mean? As a business in Nigeria, thinking, okay, we want to push some of our investment maybe to some tax havens outside Nigeria, just so that we can manage the tax rate. The law is saying anything that gives you a tax advantage, right? Whatever strategy or planning that you're doing that will give you a tax advantage or reduce your tax, so to speak, you have an obligation to disclose to the tax authority. Now, the law is not saying this is wrong, so we need to bear that in mind. Not that it is wrong. Tax planning is still allowable within the provisions of the tax law, but there needs to be disclosure. That is a new requirement. Okay, so these are some additional provisions. Pre-commencement expenses for the past 6 years are now tax deductible. Currently, what we have, if you have pre-commencement expenses, that means I am making preparation to start a business. I've been incurring costs, legal costs, maybe even rent, right? And some other preparatory costs. Currently, you cannot get tax benefit for it. But now the law is saying, going forward, you'll be able to get tax benefit for as long as those costs were incurred within 6 years before the commencement of that business. I've talked about this number 2, which is exchange of information between the tax authorities, federal and state. Okay, so for individuals, this is another exemption for minimum wage earners. Like I said, the low income earners are getting a lot of benefits based on these new provisions, because that's one of the major things that the law set out to achieve. So anybody who is on minimum wage, you earn 70,000 a month, or maybe you have staff who earn 70,000 a month. What the law is saying is that going forward, don't take any taxes from their income. And pretty much anybody who is within the range of 1.2 million naira annual income would also be tax exempt. Okay. So stamp duty on rent. So there's now a cap. Currently, when you pay your rent to your landlord, there's actually a stamp duty. I know it's quite tough. By the time you are approaching your landlord, you pay your rent, whatever taxes, definitely will be taken care of by you, the lessor, or the lessee, I mean. Okay, so that obligation to pay stamp duty on your rental agreement is currently in the law. But going forward from January 2026, the law is saying if whatever that lease value does not exceed 10 million naira, there will be no stamp duty on that. I've talked about this forceful generation of tax identification number. So please, it's important. If you do not have a tax ID currently, it's better to do that as soon as you can. So I've spoken to some of this. I'll jump to number 8 on the screen. So another addition is development levy of 4% from January on accessible profit. So it's kind of a replacement for a number of levies that are currently being charged on tax on profit of taxpayers, which is education tax, NIDA, police levy, NASENI, and whatever. So that is also there. So you recall that I mentioned that minimum tax has been scrapped for companies if you make a loss, okay? But there is a bit of twist to that. There is this minimum tax of 15%, which is more like a mirroring of a global minimum tax rule, and the rate, which is 15%. So this will become applicable from January, but then to certain companies or multinationals that meet certain criteria. So for multinationals, if the group revenue that is the global revenue, is within 750 million euros, right? Such entities will be captured. Their company income tax must not be less than 15%. Okay, and also for companies that earn annual turnover of 50 billion naira and above, they're also called by this rule. Okay, so what that means is that when you finish calculating your tax, you have to ensure that it's a minimum of 15% if you fall within that category. So if it's not up to 15%, the law is saying you have to jack it up to 15%. So this last one is talking about controlled foreign corporations. So pretty much this is trying to target non-resident companies, okay, that are connected to Nigerian companies. So there are times where Nigerian companies have interest in some non-resident companies. Maybe a Nigerian company is a foreign subsidiary of a Nigerian company, right, that can afford to distribute dividend to the parent who is in Nigeria. But there are cases where, for some tax planning purpose or gimmicks, that foreign entity might not distribute. So the law is saying going forward, whether or not you distribute, we will help you to distribute, right? So it's now kind of going to be compulsory because for any foreign subsidiary that doesn't distribute, the tax authority can then assess, the returns filed by the Nigerian entity and determine whether that profit should have been distributed or not. And they will take tax as though it has been distributed. Okay, so I think that is on a general note. Gabriel, I don't know how many more minutes I have, so I can see how to tailor my remaining time to what I think is crucial. Gabriel?
Yes, I've been dropping some charts in your chat box.
Oh, I'm so sorry. Okay, I'm not sure I can see that. Let me see.
Okay.
Okay, I think I can now.
Yeah.
Oh my, I'm just seeing it. I'm so sorry.
No problem, that's fine, ma.
I'm so sorry.
That's fine.
Okay, but quickly, if you permit me, just to go through the last slide because of the benefit that I think it would have, because pretty much that speaks to the exemptions or how we can ensure that we stay compliant and also maximize or ensure optimization where taxes are concerned. So number one, please ensure you register and understand what your obligations are. If you're a business, if you're an individual, if you're a business, make sure you register with the Federal Inland Revenue Service. If you're an individual, register with the tax authority of the state where you live. Make sure you have your unique tax ID. And in the past few years, tax penalties and interest have been very, very steep, right? Currently, it's at about 42% on an annual basis. So you can imagine when you are owing, if you are owing 100,000 naira 5 years ago, and then the tax authority comes to say that's your 100,000, and they add 42.5% to that 100,000 from 5 years ago. They add it every year until it gets to the year that you're paying. And for a lot of companies, they observe that the penalty in some cases is even more than the money you were owing. Okay, the original principal that is being owed. So it's very important, very key to ensure you register, track your tax obligations. Now, like I've said before, the fact that you have registered doesn't mean you will be paying taxes, because that's something else I know that most people are not aware of. The fact that you're registered doesn't mean you will be liable to tax payments. So just register to fulfill and file your returns to fulfill your obligation. So another thing is the fact that most businesses, especially when there is no structure, right, or when you're just coming up, when it comes to structure, most businesses merge personal transactions or activities with that of the business, or like, let me say, owner-managed businesses. They tend to merge both. So it's very crucial that you separate. For business transactions, ensure that you separate those transactions and retain documentation, because a time will come where you need to prove. So imagine if you earn income and then you put it in your personal bank account, what do you think will happen? Now that the tax authority, the law is saying there must be tax ID, 5 years down the line, when the government or the tax authority comes knocking, they will just split that your bank statement. They slam tax on it. They don't want to hear that, oh, this one is business income, this one is personal income. So it is better you separate those transactions yourself. Another thing I would say is you also need to be familiar with, the tax incentives or reliefs. So you see how you can help ensure that you stay afloat as much as possible and be in a better space. For companies, I think I'll just speak a bit about capital allowances, and then your expenses that you're claiming. Documentation is key. If you're saying I paid my auditors, tax authority wants to see where is the invoice, third-party documentation. So just ensure as much as possible you have third-party documentation because it will save you in future, right? So point 4, I'm talking about low tax investment that you can make. I've talked about FGN bond, state government bond, those are zero taxes. So you can, structure your activities in that manner. You want to buy stock, right? You make gain. I've talked about the gain, but then the dividend that you earn is taxable at 10%, not at your income tax rate, which is typically around 25% to 30% in some cases. All right, in some cases. So yes, investment in stocks. And if you can then plan it in such a way that you buy stocks, you sell, right? Once your proceeds is within 150 million naira, you escape tax on your gains, as long as your gain is not over 10 million naira, all right? And better still, if your proceed is over 150 million naira, you can put it back in another Nigerian stock. As long as you keep rolling it over, putting it back in, you escape taxes. So you can structure your transactions in that manner. Yes, so these are some other exemptions or that you can plan around. Dividend received from investment in only export-oriented businesses, they are tax exempt in Nigeria. So there are special businesses that are, I think they are registered by, is it NEPSA now? Nigeria Export Processing, is it commission now? I can't recall precisely, but they are special businesses, they have approval, and all they do is just to export whatever their produce is. So if you have investment in such businesses, whatever dividend you earn is tax-free. Number 7 is speaking to returns on your foreign investment. So if you invest abroad, so you have stock, you have interest income, you have royalty, you have rental income from that are foreign, as long as you repatriate them back to Nigeria, right, through a bank, the law is saying it is not taxable in Nigeria, right? Number 8 is speaking to gains accruing from disposal of assets by investors in startup, unlabeled startups, which are typically startup technology companies, right? So as long as you hold investments in them for up to 2 years and you are disposing after 2 years, the law is saying whatever you made from that is tax exempt. So as an individual, right, for your personal taxes, another way for you to optimize your tax position is you can claim interest on mortgage. If you have a mortgage loan, right, for a property that you live in or you intend to live in, the interest you're incurring on that, you can claim it as relief to reduce your taxes. If you have life assurance policy for you or your spouse, whatever premium you're paying on that, it can come in as relief for you, as long as there is documentation. Your pension contribution, it may be statutory, it may be voluntary, you can claim them as relief to reduce your taxes. Health insurance, HMO contributions, for health, the premium you're contributing can also come in as tax relief. NHF, these are 2.5% on your gross income. So if you have subscribed to that, of course, it's not compulsory, but if you subscribe to that, you can take benefit of that. So yes, there are a whole lot more. And the last one I have here is agricultural businesses going forward from January. For the first 5 years, they will not be liable to tax. So yes, for people who are looking at, okay, I want to diversify into agricultural business, or you're just looking for where do I diversify to, agric may be good for you for the first 5 years if you're interested in that. So I think I know I've jumped a number of slides just so that I rest here because my time is up. So I just want to say thank you. So I think I would stop here. Gabriel.
Thank you very much, Mrs. Olubumi. This was very, very insightful. So there have been some questions in the chat box, but we'll be addressing them when we're done with the final speaker. So I've just noted a couple of them down. So I'll be bringing them forward. Thank you very much. This was really insightful. So I hope you guys were able to gain so much knowledge. Yeah, I can see some people are also thanking you on the chat box, so I'm sure they must have gained a lot. Just move to the second segment of this webinar. That's the second speaker. I would like to introduce her. She's a very exceptional speaker also. Her name is Mrs. Oluwatoyin Aralepo. She is a seasoned finance leader with over 20 years experience across banking, telecoms, fintech, nonprofits, driving financial efficiency in education, entrepreneurship, and also youth empowerment. She's also an advocate for women in leadership and also SMEs. She has mentored over 5,000 business owners, wow, and received numerous prestigious awards, including Top 50 Women in Management in Africa. Well, I'm not sure I've been able to do more justice to this profile, but I'd like to invite her to come on board so that she can give us some knowledge and insights on things relating to funding. Thank you very much, Ms. Oluwatoyin. So welcome.
Thank you. Thank you so much, Gabriel, for the introduction. Please, can you stop sharing because I need to share my presentation as well. Good morning, everyone. It's such a delight to be here this morning. And I also want to appreciate the team at Midridge International and especially Biola, my friend, for inviting me to take this session. Without much ado, I want to share my screen now. I know I have just 20 minutes, so please, I need your attention. Please concentrate because I won't be able to explain all the information or insights that I have. Can you see my screen?
Yes.
All right, okay, thank you so much. So I'll be speaking briefly on funding for scale in a high cost environment. And I'm sure this is something that we are all in, whether we're running businesses or even in our 9 to 5, the environment is not the same again. And the harsh reality, we are all experiencing the impact. The bank credit is expensive for those running businesses. FX volatility is high. You can't really predict and plan. It affects a lot of importers, and in fact, even those that are not importing, we're bearing the cost as well. Inflation is so high, and the more inflation is increasing, it eats into the cash flow. And we have a peculiar, will I call it, problem in Nigeria. Even though the inflation rate has been dropping month on month, but the cost of items and commodities in the market, the costs are not really going down. That is one phenomena that we've not been able to address in Nigeria. It defies all economic sense. So this is the reason why we need to really take serious the issue of funding and also look at what are the other things that we need to start doing to manage the cost, to manage inflation, and to manage the little cash that we have. Yes, there are different government policies, like we just heard from Bumi about tax, making it easier for some small businesses, but that is not enough. And the question then is, will resilience survive in this era? We keep encouraging ourselves, and we know that in Nigeria, business owners are, in fact, they are the most resilient because there are so many things to deal with, right? We know that resilience keeps the economy alive. But what is baffling now is that I don't think resilience alone will do the magic, right? So we need to start learning about other ways. We have to start being creative. We have to be strategic. And the question is not just about, can I get funding? We need to start thinking about what sort of funding do I really need that will help me to grow my business without breaking me or without causing that stress, right? So I'll be speaking briefly about some strategies or some things that we can start doing to address some of these things. So we need to start becoming very, very creative. And I want to really dwell on three areas. I'll be looking at equity, I'll be looking at strategic partnerships, and the last thing I'll be looking at is about blended finance. I'll get into them as we go along. So I just want you to understand that growth is still possible with creativity, with strategy and financial wisdom. So it's not just about money now. We need to think about other strategies and other things that we need to do to survive and to scale and to thrive at the same time. So the key question I want you to start thinking about is, how do we fund growth sustainably without choking cash flow? So I just want you to start reflecting on that. I don't have enough time to start asking about the sort of businesses you're doing, but I'm going to give general insights that you can apply no matter the size of your business or no matter the sort of funding that you've tried in the past and you want to try in future. So let's look at equity financing. Um, Equity financing is about finding the right partners. And I'm sure we've all heard about equity. That's raising money by sharing a part or ownership of your business. It can be a game changer, and at the same time, if it is not carefully planned, it can mar your growth, right? We've seen several examples in Nigeria where the terms and conditions were not appropriately determined, and it led to heartburn and heartbreak, right? But it can be a game changer if we really understand the nitty gritty that I will not be getting into. I'll just talk briefly about how you can use equity, to bring wisdom, to bring networks and accountability, especially in a high cost environment like Nigeria. Interest rates are so high. You want to scale your business, you go to the bank, they are giving you interest rate of close to 30%. And by the time you do your maths, it's not mathing. And there's no way you can increase your costs, beyond the market. It will start affecting your customers and the ability, to get more uptake from the customers. So when we look at equity, right, you're bringing in investors to own a part of your business, right? You determine the amount you want to give to them. There are some technical things that you need to address, but it is one of the strategies that businesses are using, to scale, especially at some point that you're starting your business. And one thing about equity is not just about the capital. You now have access to a network of individuals, especially if you're dealing with angel investors, and you have access to mentorship opportunities. You have access to networks and systems, right, that you won't be able to do on your own. And one thing again I want to emphasize about equity is the fact that you're growing without that initial pressure, right? Yes, in the long run, you have to deliver based on what you've agreed with your investors, but it is more long-term in nature. You don't have to start paying loans you don't have to pay your investors every month, right? You're able to gain time to build your business, to spend some time to understand the flow. And the most of the investors, they walk the journey with you. Then it also encourages you to think like a CEO, not just a hustler, running here and there. And there are opportunities in Nigeria, outside Nigeria, that you can explore. You have the likes of the Lagos Angels, you have Growth Capital, and you have regional funds, right? Even outside Nigeria, that specializes in SMEs that you can leverage on. But one thing that I want to make clear is that you need to be clear about the terms and conditions. You need to get experts, you need to get lawyers. Your valuation has to be done rightly. You need to understand what you're getting into, because it can be tricky if you're not very clear on the decisions, on the nature of investors, and the value, right, that they are going to bring. I just have an example here. We all know Paystack. At some point they started small, and at some point they attracted global investment. At some point, Stripe took them over, but they had other investors that helped them at that initial stage. So they were able to build structure. They were able to build trust, which is extremely important, because most of the time investors fund credibility, before they start funding your creativity. So you need to build that structure. This is one area where you can explore, to get that funding, right, that will give you some peace of mind and some time to build and leverage. Now, moving on to the next one. And this is particularly interesting. When we talk about strategic partnerships, I want us to understand that collaboration is the new capital, right? It's not just about money. The question I want to ask you is that, what do you have in your circle? What platforms have you joined? What business platforms, right, have you joined? And what are you gaining, from those platforms? I need you to understand that sometimes funding is not just about money. Sometimes it is about access. It is about collaboration. It is about working with other business owners that, maybe you have things in common, leveraging opportunities. And social capital, you can't really quantify it. Just imagine um, a scenario where, as a business person, you're part of, let's say, a business platform. And let me even use this platform as an example. Biola has brought everyone together. You are going to meet people. You may be a producer, right? And you need distribution network. We can have partners that are here, right? Or participants that are into logistics. So instead of you spending money trying to build that distribution network, you can leverage on others, right? They have the distribution opportunities, they have the infrastructure. So why don't you partner with them? Agree on, maybe you want to share revenue or you want to share profit. right? And you don't have to spend your own money upfront. You don't have to get into the stress of looking for funding to do that. Resources, pooling of resources is another one. Like I mentioned, is it possible for you to partner with another business to share logistic costs? Because you can't fund everything yourself. You have to leverage on scale so that you can share the cost. That will save you the cash that you would have invested in that infrastructure. You can use that cash, to address other needs in your business. Is it also possible to collaborate with NGOs or development agencies that are aligned with your mission, right? Because every partnership, just look at it as potential funding in disguise. And the last point I want to make under strategic partnership is to ask yourself, is it money that I need now, or do I even need time? Right? We are familiar with that quote that time is money. So time is also a form of capital. And that is the reason why you need to just sit down and evaluate, what do I need at this point in time? Is it money that I need? Is it partnership that I need? Or do I really need time? Right? Businesses also require time to grow. So you need to ask yourself, how am I spending my time? Have I given this business the required time, right, to grow? Because if you've not invested in time and you've gotten funding, it is most likely that the funds will get wasted. So it is important that you understand what is required at any point in time. So I've spoken about equity, I've spoken about strategic partnerships. I want to quickly move to the next one. And when we talk about blended finance, we're looking at the power of mixing different opportunities. So it's about combining grants, concessional loans, and private capital to reduce risk. And there are so many opportunities right now. If you are in the right network, if you are also doing your research, right, to understand what is happening, even banks, are engaging in some of these activities, right, to fund businesses and to help them grow, especially for youth, especially for women, and green innovation. Organizations like BOI, like Africa Development Bank, GIS, and so many other, even Tony Elumelu Foundation is there. And depending on the scale of your business, there is always an available option for you. And the interesting thing about grants is that, grants are non-repayable. They are financial gifts given, but tied to specific mission and outcome. And right now, we see a lot of impact financing. Impact financing is just looking at what are the other, what are the what are the things that can be done? What are the positive impact, right, that the fund can make or achieve? It's not just about profit alone. How is your business affecting the environment, right? How is your business affecting your staff? Is it adding value? Are you creating jobs? Are you reducing the carbon emission? Are you taking care of the environment? And most businesses now, in looking for funding, they need to now talk about the impact. So we're now looking at issues beyond the profit. How are we impacting on the people? How are we impacting on our environment, right? And I've given some examples, the World Bank, the IMF, yes, USAID, they stopped funding a while back, right? But they were doing this, and there are still so many organizations that are into this. There are a number of opportunities like incubators and accelerator programs, right, that can help nurture that idea. Even from the idea stage, they help you to incubate. At some point when you've gained traction, then they can help you accelerate. You gain a lot of knowledge, you gain a lot of wisdom. And we also have loans. Loans, yes, loans are tricky, but they are also very, very useful. If you understand the type, if there's a right match between the need, right, and the type of loans, because loans come at a cost and is usually for a specific period. And if I want critical thing about loans is that cash flow is important. You need to do a lot of due diligence. You need to understand how cash is going to come in so that you are not under pressure. So blended finance, you can have grants at the same time, you can have loans, right? You can also have some opportunities of getting mentorship and impact funding in at a go, right? In your business, you can have all of these opportunities at once. So I've just highlighted here some of the agencies. There are even government agencies in Nigeria, that can support, right? We have the SMEDAN for the business development and helping entrepreneurs to understand how to run their businesses. We have Bank of Industry. We have the Nigerian Export Import Bank. At some point, Lagos State was also trying to do something. CBN is there. There are a number of foundations that are into granting and supporting businesses. We have the likes of Y Combinator, we have Faith Foundation, we have Tony Elumelu Foundation, and we have the traditional financial institutions, right, that can also support you. But what is important is understand what is required per time. I spoke about loans. What is important is ask yourself, what is this loan required for? Because if there's a mismatch between what you need the loan for and how you are going to pay, then it becomes a problem. Let me give a very quick example. For an overdraft, if you just need short-term funding that is not consistently required, maybe you want to pay your staff salaries and you have shortage in 1 month, you can get an overdraft. An overdraft is like your pay as you use or pay as you go phone service, right? It is what is used. If you sign up for an overdraft of, let's say, 1 million naira, and you only used it, you only due down, let's say 100,000. I'm just using a very simple example. You will only pay interest on what you used, which is the 100,000, right? You won't pay interest on the entire 1 million. And if the overdraft was just for, let's say, 2 weeks, you will only pay interest for 2 weeks. But if you've gone to take a term loan, right, of 1 million naira, you are going to pay interest on the entire 1 million naira. For if the term loan was, let's say, 1 year, you are going to pay the interest for 1 year on the 1 million, whether you use it or not, right? So it is very helpful for you to understand what is required and how you are going to fund it and understand the cost of funds, because ultimately, cash is not free. Is either you're paying interest on the loan you've taken, or you are losing sales, because if there are requests that you can't fund, you are losing sale. And when you lose sale, you are losing future cash flow, and you're also losing profit. So just quickly, how do you position yourself for business grants? You need to do a lot of research. You need to prepare, check your eligibility. There are different terms and conditions. Make sure that your business is registered. Bumi mentioned earlier that if you are mixing your private and your personal financial activities into one, you stand the risk of getting taxed by government, and you also stand the risk of losing the opportunities, right? Funding opportunities will be lost. because they will see you as an unserious business. And trust is an important element, responsibility and accountability. People are giving you resources to use to change lives. You can't afford to misuse those opportunities. Otherwise, you're blocking others, especially, and you're also blocking yourself. This is just to show you that you need to understand the face of your business and the funding type that you require. Because if you're just starting out, you're trying your idea, you don't even have customers yet. You can't start saying that, oh, I want to go to the bank for loans. Banks will not answer you because banks are mediators. They are taking from the surplus to those that need it. And banks can't tell their customer story that at the end of the day that, oh, sorry, I gave your money to another customer. And now with internet banking, you have access to your funds at any point in time. So it is important so that you don't put yourself under unnecessary pressure. You need to match the size, the scale, right, and the face of your business with the different requirements. I don't have time to go into all of this, but you can see the business owner here that is struggling because too much money is also a problem. You will not be able to get the maximum use, optimize the resources, and it will create stress for you as a business owner. I think I've spoken about incubators and accelerators, but what I just want to emphasize again is understand what the purpose of the loan is, because you need to be sure, is it for a short term or for a long term? How much money do you need and by when? And this is where financial education and literacy is important. I told you everything is not about financial resources or funds or money, right? It also has to do with your network. It has to do with time as well. I gave an example about working capital or equipment investment already. Then just think about it. Have you checked inwards? Can you explore maybe invoice discounting, vendor financing? Customers sometimes can fund, you get advance payment, right? And if you are giving credit, have you also factored the cost of the additional funds that is required into the cost of your item? So quickly, I put this here, just like commandments that you need to follow. Make sure that you are doing whatever it takes to keep costs low until you have revenue. Otherwise, it becomes a problem, right? Because sometimes people make the mistake of raising too much money. You raise too much money, you spend it, you can't account for it, right? And make sure that, especially when you're just starting, do you have what customers, the minimum viable product, have you tested it, right? Are customers willing to pay for it? Do you understand your business model? Because business model is about how you are going to make money, right? What are you going to sell? Is there a problem you are solving? If you are not solving any problem, right, then it becomes very difficult. And if you are raising too much money, you become breakfast for investors. At some point, they can be very harsh, right? And I already spoke about it. Explore the option of getting funds from your customers as well. Is it possible that they pay in advance? Well, that depends on the type of business that you're running. So it is important that you take cognizance of all of this and avoid all of these mistakes. I spoke about not having business records because that's like your starting point. And sometimes relationship is evaluated based on your financial statements and your bank statement as well, right? Don't invest money in assets that you don't need. Make sure that you're pricing your product appropriately. Make sure all the costs are included. And when you're starting out, please don't commit huge business expenses without checking. A number of businesses, the first thing they do is rent fancy offices, buy cars, employ staff that they cannot pay. And at the end of the day, you are just burning cash that you will not be able to account for, right? Make sure that you've looked at your cash flow before taking any loan. Evaluate your cash flow plan, evaluate your revenue plan as well, because your revenue will lead to cash flow, right? And make sure that you are not spending so much acquiring customers that are not generating revenue for you. These are the things that you need to start doing. I just want to round up, right? What are the key takeaways from this session? We've spoken about it. Sustainable growth can come from aligning your funding with your vision. Don't be desperate, right? All of the options that we've spoken about, try them out. Look at the ones that work for you. Sometimes it's a combination of the different ideas, right? Make sure you are choosing partnerships before pressure, right? Stewardship over speed. This is very, very important because resources are going to be committed into your care, right? Remember Paystack. They didn't just get acquired by Stripe because they were the loudest. They built systems, they were transparent, compliant, data-driven, and that gave the investors confidence. So it is important, right, that you build the right structure before you scale. Investors will rather fund credibility first, before creativity. And we know the environment we are in. Innovation is not an option, it is oxygen. You have to start thinking of how do I creatively collaborate and work with others. Yes, it is good to dream. When you are dreaming boldly, you have to also plan wisely and make sure that you are growing in a way that is sustainable. Because if you grow too fast, you overtrade, and the result is that you can't sustain it. You want your business to build that legacy, right? So even in the toughest economies, there's always opportunities. But you need to do that with purpose, with creativity, and with financial wisdom. And mid-reach, they provided you this dance floor. So the question is, are you going to get up and dance and do what is required? Thank you so much.
Thank you very much, Mr. Oluwatoyin. I'm definitely going to get up and dance. Yeah. All right. So thank you very much. I'm sure everybody gained a lot from this session and it was very, very insightful. I'm sure some of these mistakes that you noted down would enable us do better when we are trying to seek for funding. All right. So would like to go to the next session. That is Mrs. Abiola's session. Thank you. So just a little brief about Ms. Abiola. So Ms. Abiola Adediran is a seasoned family business advisor and a corporate finance expert with nearly 20 years of experience across investment banking, consulting, and private equity. She's a partner at Genie Family Office and managing consultant at Midridge International, specializing in wealth management and business growth across Africa. She's also a mentor, an author, and a keynote speaker recognized among Nigeria's 100 most inspiring women and a member of Forbes Business Council. She holds an MBA from Edinburgh Business School and serves on several startup boards. So please welcome with me Mrs. Abiola Adediran. Thank you.
Thank you very much. Please confirm that you can hear me loud and clear. Thank you for being here over the last about 90 minutes. Some of us joined very early, so you've been here for about 90 minutes, and we've talked about tax, the new tax law, the new things that are coming up in the new tax space. We've talked about how to get funding for our businesses, alternative ways to fund our business to be able to scale. I'm still waiting to get confirmation. I want to be sure you can hear me before I get into the heart of my presentation.
Yes, we can hear you. Thank you.
Fabulous. Thank you. Thank you so much. All right. So in wrapping up the webinar segment for today, I'm going to be talking about strategic choices that you would have to make for you to be able to thrive in 2026 and beyond. I'm sure you know that for all of us that are business owners in this place, 2025 has been one of the most challenging years for most businesses in the last decade. Between fluctuating exchange rates to high inflation, subsidy removal, soaring bank credits, interest rate for bank loans went as high. I mean, I know microfinance banks do as high as about 48%, right? Because I sit on the board of some of these companies, so I know, right? And it almost felt like the economy was testing every nerve inside of you, every entrepreneurial faith that you had, every flexibility that you had. Anyone that can relate with this, just put, a fire emoji or any emoji in the chat box for me. Let me know whether you can relate to what I'm talking about. So if your business survived in 2025, you did not just run a company. What you navigated was indeed a storm. And I'm sure you can relate with that. I sit in consulting rooms with business owners, and I know what business owners are going through, right, on a daily basis. It's like, you really like require faith to keep everything going and keep believing that you can really make it work. But now, here is the interesting part. Every economic reset creates a new set of winners. That's the truth. So in every upheaval, in every storm, right, in there lies opportunities for the people that are going to emerge on the other side and are going to be the winners that we'll be celebrating. Just like Toyi mentioned when she was talking about Paystack, the likes of Paystack, Flutterwave, those guys that are now unicorns and people that have, become investors in this type of businesses and have exited and made a lot of money. Even the businesses doing very well by themselves, particularly emerged in the 2016 recession, where a lot of businesses were downsizing. Businesses like Paystack, like Flutterwave emerged in those sessions or in those seasons. And now we are entering another reset era. So it's time for you to decide what kind of founder you're going to be. Whether your business is going to be one of the businesses that will also emerge on the other side of this storm that we're navigating and become a winner in the business that you're leading or in the industry that you're operating in. So I'm going to let us quickly do a quick recap of what 2025 was like for us. So if you look through from January till now, we're in November 2025, just a quick review of what, the business environment, the business landscape has been. Talk about inflation and rising costs. Inflation sometime earlier in the year was as high as close to about 29%, right? So huge rising costs. For those of you that were in manufacturing, I'm sure you understand what this means. Input cost was on the rise. You couldn't go to the market and come back and then go back the same day and find the prices are the same thing. And that already is a problem for most businesses, right? So with inflation averaging over 29%, even though now it has come down to about 18%, you would realize that input costs actually did skyrocket. And that meant that for most businesses, your margins began to shrink. And founders had to make tough choices between whether they should raise their prices or they risk losing their customers, or to absorb the cost and squeeze their profit margins, right? So imagine what that looked like for people that are producing producing products and having to take in all of those costs. There was also FX volatility, right? The Naira danced between 1,450 to about 1,650 per dollar. I think right now it's about, it's relatively stable at about maybe 1,450, but it was as high as about 1,650 at some point, right? For most part of the year. And so import-dependent businesses felt the heat very deeply. Some people even began to look for local substitutes, began to look for joint ventures with local producers just to be able to reduce their exposure. Talk about high cost of funding, which I already mentioned. The central bank's monetary rate policy, the MPR, peaked at about 26.75%. What that means is that is the rate at which banks are or the rate at which the CBN lends to the banks. So what it means is that there's no bank that can lend anywhere lower than that. So, I mean, for those of you that have engaged your banks to maybe get a loan or something like that, I'm sure you know by now that there is no rate that is anywhere less than 30%. In fact, I know microfinance banks that do as much as 48%, like I said earlier on. So SMEs trying to get funding for their business by way of bank loans. You can imagine what that has been like for most people. So it then means that all of a sudden, if all you have relied on in terms of raising working capital for your business is bank loans, suddenly you find that your cash flow is drying up for the most part. And then, of course, come to think of the new tax policy, everything that is shifting, everything that we've been hearing, and we've had a presentation earlier about that, and of course, we're going to have Q&A after my session so that we can deep dive into a bit more questions, because I know a lot of you have questions. I've seen some of it in the chat, right? So think about the tax policy shift, and we don't even know what is about to hit us. It is when we get to 2026, when these things really get into effect and they are now being implemented, that we really begin to understand the full effect of these things. And if we're not prepared, which is why we're also hosting this webinar, to really just prepare our mind so that we can ask the necessary questions and know the things that we're supposed to do to get prepared, so that we're not on the other side of the law where our businesses are significantly disrupted just because we're not compliant. So there's just a whole lot that is happening. Coupled with that is the talent drain that we've experienced. And I mean, it's not new, but it's just in 2025, it has also culminated in the fact that, we still continue to see talent drain, thousands of skilled professionals who have left for better opportunities abroad, and those who have even stayed. What I've seen the most is that those people that have stayed have now increased the amount of salary that they are willing to accept. Somebody that is even an average person is now asking for peak salaries, and you find out that people are moving very quickly from one job to the other. There is really little or no loyalty among employees because they're just moving to the highest bidder, the person that can pay the most. They move very quickly. So this talent mobility is also something that is affecting a lot of businesses, right? And then, of course, consumer behavior. There's now this new value conscious consumer behavior that is emerging, where people are prioritizing essentials over luxury. So for those of you that your business is focused on luxury items, I'm sure you will have seen a dip in the demand for your product, because with inflation on the rise, with a lot of things juggling for people's the amount of cash that is available, disposable income that is available to be spent by households, what they are now doing is prioritizing essentials above luxuries, right? Even though spending still remains strong in certain sectors like the health sector, education sector, affordable housing, and digital services, there are certain sectors that have suffered the most because they are not really essential products or essential services. Again, you're going to have to think about what this means for your business in 2026. If your business is largely servicing the luxury segment, you're going to have to think of how you're going to reposition if you're going to continue to thrive in 2026, because we're only just going to see more and more of these things that I've talked about. Now, I thought to share a few trends that we see emerging that's going to shape 2026 and beyond, which I call the win finders. Now, these are trends that are going to become more pronounced, right, in 2026. And we're going to see more and more of this effect on businesses. Number one is the era of adaptive leadership, right? That is because technology is changing the game. Technology is changing the way that we're doing business. It's accelerating how we do business. And we're realizing that a lot of business founders have not had to, embrace change by making sure that they have data-driven decisions. Gone are the days where you can just use your intuitive knowledge, use your judgment, tell yourself, oh, I've been in this business for 20 years, so I know it like the back of my palm and I can just figure it out. No, sir, it's not going to be like that going forward. Data is changing everything. If you don't have data that gives you information about what's going on in your business and in your industry, you may immediately find that you are just not abreast with what is going on, and you just be on the shorter, you'll be taking the shorter end of the stick because people have moved on and your business is just not able to keep pace, right? And there's a lot of uncertainty that is going to outperform those who are not up to date. Another trend that we're seeing is trends with, future-ready teams. Now, for you to scale your business, we've talked about how to find funding to be able to scale your business so that you're not burning out in terms of cash. But when you think about scaling, it goes beyond that. Scaling is not just about growing your revenue alone. It's also being able to assemble a team that are capable to support that growth. Now, a lot of business founders are struggling with being able to delegate properly, being able to even find quality talents to delegate to. And even when they have those talents, many business owners still struggle with being able to really just delegate to them. And then also finding teams that are innovative and creative. That's also something. So for businesses that are going to thrive in 2026 and beyond, they are the businesses that are able to find the crop of talent that can come together around their vision with clear understanding, and they're able to be innovative and creative, not doing business as usual, but they're able to bring their creative knowledge and skills to be able to support the business. And of course, the founders being able to delegate better as well. Another trend we're seeing is being able to balance innovation with execution. Now, I know that as business founders, we're pulled in many directions. There's pressure for us to innovate, and also there's pressure for us to deliver immediate results, result for our clients, right? Now, if you don't have the right frameworks in place, this tension can actually lead to burnout. Because you're trying to be strategic. They tell you, you have to work on the business, don't work in the business. But you see, depending on whatever level you are in the business, you would have to work on both. If you're just starting out in the business, right, where you don't even have a lot of people supporting you, and you're likely, the person that is doing more of the work, right, more of the day-to-day work, you're going to have to do the two of them. You're going to work on the business and you're going to work in the business, right? And so the reality of that is that you must take some time to, have that strategic thinking. You have to find yourself within a system or a network that allows you to do the strategic thinking, or leverage platforms that helps you to be able to bring the right strategy into your business, or at least help you to be able to review your business to ensure that you are aligned as much as possible. Whatever it is that you're doing is delivering the result that you want it to deliver. And then in working in the business is what you do on a day-to-day basis in terms of operations, in terms of, meeting the needs of your customers. And that in itself is also very important. So you're going to have to find that fine balance between how you continue to innovate in your business. You don't want to be stagnant, but you're also present enough to continue to execute at the level of standard that is required. Another trend we're seeing is resilience as a leadership superpower. It's no longer business as usual. And in 2026, it's even going to be more interesting as things begin to unfold. With economic uncertainty, with Trump saying whatever it is that he's saying. I know a lot of us have heard all of that on social media, and we all follow the news, right? There's so many things that are just unfolding, right, in the economy. And we're just wondering, how does all of these things impact our business? So you, as the leader of the business, you just definitely have to have resilience as a superpower, right? Because the economy shifts, the market fluctuations are not about to stop. And these things are inevitable. So what it means is that you're not only keeping your business afloat in tough times, you also want to be sure that you're able to position your businesses very strong so that it can emerge even stronger beyond 2026. So you're definitely going to have to, do whatever it is that you need to build resilience as a leader. And by that, it may mean that you support yourself with you plant yourself within networks that become your support system, as it were. For some people, you may have to set up an advisory board of, wise heads that you can sit with at least on a quarterly basis that just help you to stay stabilized and make sure that you are still thinking right, and just, get you on point and make sure that whatever you're doing, you are regulated. You're not just making rash decisions. Whatever it is that help you as I don't want to say coping mechanism, but something that just really helps you to be stable, and be able to make rational decisions, even if you're going through a lot of pressure. You're going to have to put that in place, right, in 2026 and beyond. And of course, another trend we're seeing is cross-border leadership challenges. Because with cross-border expansion, I've seen a lot of businesses who have spoken to me about how they want to scale their business and take their business beyond, Nigeria or beyond the shores of Africa. They want to take it into Europe, into US, and even Asia, right? And so with all of that comes the challenges of navigating cultural nuances. I've seen on social media in the last couple of weeks how people have been talking about China, the opportunities that are opening up in China, the fact that, the Chinese are sort of welcoming Nigerians with open arms. And you'll find that some of them now are doing a lot of China tours. I even went to register for one because I really wanted to understand what exactly, they were trying to do. Now they take Nigerians on China tours where you're able to go into factories and find factories that can maybe produce your product even cheaper, or you find products in China that they are willing to expand into Nigeria, and then you become the sole distributor for their products. or just being able to produce your products cheaper. People are just really exploring options that help them to be able to manage their margins and get better costing for their products and things like that. So with all of these opportunities also comes the challenge of navigating the cultural nuances. There's also the need for you to really embrace that the reality of remote work, because I mean, managing remote teams and making sure that they are very productive is also another challenge that you definitely have to, continue to manage if you've not already started managing it. So if you're planning to scale your business internationally, which is a major growth driver, right? You're going to have the right set of leadership capabilities. And of course, you want to ensure that these opportunities don't become pitfalls for you and for your business at the end of the day. Another thing I'm going to talk about is governance now is the new capital. For those of us, because I mean, when the last presentation was going on, she was already talking about the fact that you can begin to think about equity investors, equity funding, right? And so if you are beginning to think, you want to position your business to be able to attract investors, then you now know that governance is the new capital, because investors are no longer impressed by your passion only, right? They want structure. So businesses with clear governance frameworks, with transparent reporting, with very clearly defined ownership structures are attracting capital faster. And I can tell you that for free because, I work in that space. Toyi works in that space. And we know, even though a lot of people are saying there's no money or there's no, there's no funding, I can tell you there's funding. That's the truth. It's only a type of business that is able to access those funding. And of course, you have to stay abreast of information. You have to join certain networks. You have to be, current with your research because there is funding. But I can also tell you that, the investors are looking for a certain type of businesses, right? I attended an event recently, the ABAN event. ABAN is an Angel Business Association Network, right? Where angel networks across Nigeria and indeed Africa, representatives from all over Africa came together and they had an event in Lagos. And what they were talking about in a nutshell is the fact that they've all come to the realization that we need to fund ourselves. Africa needs to fund itself. And so a lot of people now that have money, that have capital, are looking for businesses that they can actually fund. So let me tell you, the person that is going to fund your business is maybe like 2 or 3 persons away from you. That's the truth, because now we've realized with everything that is happening around us that we need to fund ourselves. And African investors are also rising up to the challenge because they're seeing the opportunity, especially in Nigeria, right? So you just have to be ready. That's the truth. You have to stay ready. You have to prepare yourself such that when those opportunities come, you're not found wanting. All right? You're not found wanting. Governance has now become an economic advantage. It builds investors' confidence. It helps to also reduce internal conflict as much as possible. And of course, it positions your business for longevity as much as possible. We're also noticing the funding shift. I've talked a little bit about that, where people are moving from debt funding into partnership capital. Toyin talked about it, right? Because debt funding is no longer cheap, right? And the implication of that is that if you go for capital that is too costly for your business, the implication is that your profitability will keep dipping. And if your profitability keeps dipping, how do you build reserve in your business to be able to weather the storm, right? How do you build your capital? How do you grow as a business? So the era of cheap credit is over. That's the truth. With interest rates in the region of almost 40%, you can't rely on bank credits to be sustainable. So you have to think differently. Think in terms of equity partnerships, think in terms of venture debt, think in terms of blended finance, as Toyi has already shared with us, and there are many platforms that you can seek for that. The other trend that I talked about earlier is thinking about, digital, being data-led, being data-driven, very important. There's also diaspora and regional capital flows. Nigerians abroad are remitting as much as $24 billion. In fact, they've remitted up to about $24 billion in 2025 alone. And that is a growing percentage of what is now being channeled into investments, not just consumption. So Nigerians in diaspora are bringing money home. They are investing back home. They are actively seeking credible structured businesses to fund. Do you know how I know it? I have a lot of clients in the UK, for instance, that have now found UK very, very tough. UK is now a tough place to invest in because of, changes to their tax regime as well. It's no longer rosy. In fact, for most of them, they're moving money out. They're moving their investment out of the UK because UK now has become like US, where you invest in the UK tax authorities are now looking at the tax of all, like the US, used to do, where you invest in the UK, but by virtue of the fact that you're a resident or maybe you do business and you earn out of the UK, they begin to also touchlight into all your investment in other places or all the other places where you earn income. So those places are no longer looking exciting, let me put it that way, for people that have money. So they're looking for alternatives. People that have money, high net worth individuals, are moving their wealth out of Europe. They're moving their wealth out of the US, although many of them are going to places like Dubai, places like Singapore. But I can tell you that Africans in diaspora will favor bringing their money back home to Africa, because even US, China, and all of those places are also looking into Africa. So are you going to be the business that they are going to be, that is going to be favorable, or that is going to be well positioned to be able to attract the capital even when it's coming in? So that is why you know that your business has to be prepared for you to be able to even get access to the diaspora money that is flowing in. There's also the focus on ESG, right? Globally, ESG investing represents over $30 trillion in assets. In Africa, investors and DFIs, right? DFIs is development finance institutions. They are now aligning funding with measurable environmental and social impact. So that is why you also have to think in terms of ESG for your business. It's very important. Founders who are able to integrate sustainability and social value into their business model will not only attract capital, but they will also attract top talents. They will attract the right type of customers as well. And of course, we've talked about the rise of strategic alliances. Tony talked about that, so I'm not going to go into that anymore. Now, let's talk about the practical solutions for 2025 challenges, because I know this is what you're waiting for. We've talked about all these plenty things. So what's the way forward now? Leadership development is a differentiator. Gone are those days where you feel like, as a founder, you've been at this business for so long, so you don't need training. You need training. You need to be retrained, because your leadership capability needs to evolve. What you used to carry from the last decade is not going to carry you further into the next decade. So you have to be able to build your leadership capability, to be able to align your team and to be able to align your strategy and execute it effectively. You have to move from that leader who is operating in hustle mode to a leader that is operating with structure. You have to build systems, not just energy, not energy that is dissipated in different directions, right? Very important. You have to be able to balance innovation. You have to be able to balance it with execution. You have to be able to create holistic solutions that improve your leadership outcomes. So as I was talking about, you need to rethink structure. Okay, you have to look into your business, ensure that your business is not just based on hustle, right? There are proper systems, documented processes. You're also building a leadership bench within your business, meaning you are raising your teams to become leaders within the business, okay? And you're also able to adopt governance practices that make your business investor ready, which is what I already said. You need to build financial discipline. You can't do lao with your money anymore. And how you execute your transactions now is very important, because the tax man is after everybody, right? So you can't do anyhow. You can't just pay money anyhow into your account. You can't receive money anyhow into your account, because you're going to account for everything. And you must have documentary evidence for every transaction that has gone into your account. Otherwise, the tax man is just going to slam you tax anyhow, and then you'll be explaining yourself. And the process of going to the tax office to engage and answer all those questions is disruption for your business, right? So you want to make sure that you prioritize liquidity management, have proper tax planning, and you must be able to track your performance so that you're not just, you're tracking the right things. You're not just tracking vanity growth. You're not just looking at top lines without looking at your bottom line. Financial discipline is going to be very, very important. You need to institutionalize decision making. You can't make decision by just your intuition anymore. You must have data that backs your decision making. You must have risk management frameworks that you are using to interrogate the decisions that you're making. You must have clear performance scoreboards that you're using to check your performance and tracking it on a month-on-month basis as much as possible. All right. You need to leverage partnerships, which is what I already talked about, right? You need to invest in people. You need to invest in technology. Your people need to evolve as well. Their digital readiness is important if your business is going to thrive in 2026 and above, right? The level of efficiency and productivity of your team is a function of how well they're able to use some of these digital tools that are coming up, because they will soon be left behind if they don't know how to use it, and your business will be grossly inefficient in the way that they operate. Think cross-border as well. As you position for regional expansion and currency diversification, think about all the new markets that are opening up and how you're going to be able to access those new markets that are coming up. So in closing, right, 2026 is going to reward not just people that are busy. It's going to reward people who are building their businesses with clarity, who are building their businesses with clear strategic direction and with structure. So you must be able to combine structure, strategy, and stewardship so that your business does not just survive, but you are able to navigate this new reset. So the next action step that I want you to take, number one, you need to go and revisit your business model and make sure that it is still relevant for the future of your business. Number two, you need to go and reassess your funding mix. The cost of funding that you have right now, both the one that is from friends and family and the one that you got from financial institutions or whatever source that you got your funding from, or maybe you even got supplier funding. Just go and reassess that funding mix and make sure it's making sense for you, for your business. I have clients, for instance, that are in the real estate space. And for people that are in the real estate space, I know it's been tough in the last in the last 3 years, I would say, because with inflation has, a lot of businesses have not been able to deliver. A lot of real estate businesses have not been able to deliver on their projects. And that is because they have the wrong funding mix for their projects. You have to go and reassess everything. And then you have to recommit to strategy and governance as much as possible. Now, there's a year-end retreat that we're planning, because all of these conversations, see how I'm rushing over it. Even all the other speakers had to rush over, all the things that they have to say. And there's a lot really that we need to unpack. So what we've done is we're having a 1-day intensive year-end strategy retreat for CEOs. We made it cheap. It's 100K. 100K, you can spend 100K in one sitting like this for lunch. So it's not even a lot of money. But this is going to give you perspective into specific areas of your business. And it's going to arm you with the necessary tools that will help you to thrive in 2026. It's happening in the next 2 weeks. November 22nd, it's in Lagos. It's physical, right? Somewhere in Oniru, at Hotel in Oniru. That's where it's happening. So I expect that the team will be able to drop the link for you to sign up immediately. And if you're able to sign up immediately, you may even be able to get opportunity for maybe one-on-one. I mean, we can give freebies. Just go on the site. You'll see all the freebies that are available. If you're able to sign up between now and maybe November 10 or something like that, you'll have an opportunity to get some maybe one-on-one sessions with us after the session if you need to. But I mean, I'm going to rest it here so that we can get into the Q&A, because I know we have questions and I want us to be able to trash the questions as much as possible. Thank you so much.
All right, thank you very much, Ma. It was another insightful session. I'm sure everybody was able to gain one or two things in regards to topic that was spoken about. So just to dive into some of the questions on the chat box has already been answered, but for the sake of everyone here who didn't get those answers, I'd like to just list about 3 questions. So I think the first question is for Mrs. Olubumi Ketui, Kutei, sorry for the pronunciation. Law firms are not allowed to register as a license.
Can
you hear me?
Speakers be on video so we can spotlight them?
All right.
Yeah.
All right. So for Mrs. Olubumi, law firms are not allowed to register as a limited liability, but as a business, given this situation, under what category will law firms be taxed? Then the second question in relation to that is, secondly, will the tax law affect savings in domiciliary accounts upon withdrawals, as well as interest occurring from other forms of investments? So those are the 2 questions for you.
Okay, thank you, Gabriel. So for the first one, right? So law firms are registered as partnerships. Okay, so they will be taxed as partnerships, not as a limited liability company. So what that means is that it's the partners of the law firms that will be taxed. So whatever profit has been distributed to them will be taxed in their hands, right, for each respective year. So that is the way that flows. And that will typically follow how a business name is taxed, because it's a partnership and not a limited liability company. So I don't know if that's clear. So essentially, that would mean the personal income tax rate of the partners, right, is what will come to play, in this case. I hope that clarifies for that, question. And
yes.
Second,
okay.
Okay.
You can go on, Ma.
Okay. Thank you. So the second question is around investment income. So for your investment incomes, typically you have, I think I've already dropped that in the chat box. So you have the fund manager take tax already from you before they pay you your net returns, right? So that tax that is taken is the final tax on that income. So for instance, you're earning interest income on a particular investment that you subscribe to, they would have taken withholding tax at 10%, and that is the final tax on that income. Okay. For DOM accounts, so there is actually a provision that exempts income from domiciliary accounts, savings, whichever, right? Those incomes from tax currently in the law, right? But from 2026, I'm seeing that has been taken out of the exemption list. Okay, so it's looking like going forward, that would then become taxable just the way you have your other investment income tax at 10%. Then that becomes the final tax on that investment, on the income. I hope that clarifies. Gabriel, so I've answered the two questions.
Yes, so there's one more question for you, Ma. Is investment in treasury bonds taxable?
Yes, it's taxable. So it used to be exempt. But from 2022 now, the exemption was frozen, so it became taxable. So yes, it is currently.
All right, thank you very much, Ma. So for Mrs. Oluwatoyin, so there are just two questions here. So what are the typical stages of funding for a startup, and when should this person, when should he raise capital? Then the second question is how does he calculate how much equity he will be willing to give up in exchange for funding?
Thank you so much for the two interesting questions. The second one, I said that's on how to calculate the equity. You need to, there are technicalities relating to that. So it's not something that I will address here, right? But what is important is because there's going to be valuation. Valuation means what is the worth of your business, and that depends on a number of factors. It depends on the industry you are in. The tech industry valuation is different from the food and beverages valuation because there are different fundamentals and underlying principles that impact on them. So it's not a one size fits all. It depends on the value you are getting. Some investors may want to take more if they decide to give additional value, maybe from mentorship perspective, or they are going to connect you to their other networks or distribution, right? So it depends. So I can't really say a particular amount is the optimal one. It is business and situation specific. So I will advise that you get the support of a finance funding specialist and a lawyer at the same time, because it's very important that the terms are very helpful. Then the first question around what sort of funding is required for different types of businesses. I think I showed that briefly, looking at the funding types and the business phase. So for instance, if you're just trying out your ideas, right, you start by bootstrapping based on your personal savings or maybe your family and friends. There are opportunities now where you have incubators and accelerators. So they will help you to work on your ideas, right, and gain traction. So at the initial stage, you need to, because you don't have a product yet, you're just still trying out whether the idea will work. So you need to take funding that is less risky at that point in time. And most people start with their own funding. And sometimes it's not even just about the funding. It's testing whether there are users, right, of that product. So at the initial stage, maybe you even have to give items out for people to test to check whether it is working or not. So at that point in time, I won't advise you to start getting maybe equity, or maybe you are now going to the banks to start lending or borrowing funds, right? That is risky. So once you've tested your idea, your business model is clear, your revenue model is clear, you have problems that you are solving that customers are willing to pay for. It's not just solving, but you're solving a problem that people are willing to pay for. You are clear about the distribution, the channels, the resources you require, because at that point you would have been able to quantify how much is required at what stage. Then you can start looking at equity, looking at different types of investment. Maybe you need to get venture capitalists at that point in time, right? And you can also blend it with grants, with a mild debt financing, right? Or a mixture of all of them. And as your business is growing, as you get established, then your relationship with banks will be strengthened, because you now have track record that they can rely on. Then, in fact, at that point in time, they will start offering you opportunities, trade finances, credit lines, right? And there are institutions that I mentioned earlier, like the Bank of Industry, like the Nezim Bank, depending on the type of business that you're doing, right? Then you begin to look at all of those. So understanding where you are, the stage, and what is required will really help you. So you need to do your homework properly. So let me stop there. I hope that has been helpful.
Yes, thank you very much. That has been helpful. So Chioma Imo asked a question. I think it's the last question we'll be taking. But I'll need a follow-up to this question from Chioma. For those living in the UK, how does the new tax law affect personal account transfers? So I think Ms. Zolubumi went on to ask, do you mean transfer of funds into Nigeria by a person living and working in the UK? Chioma, if you could please clarify. Okay, I think she's coming up now.
While we're waiting for her to clarify, just to speak to what Tony was talking about, for those that are considering how they can determine the kind of equity funding, how much they should part with, and all of that, I think your best bet is to speak to a financial advisor. Very important. She already mentioned that. Speak to us. We do financial advisory, so we can at least give you some guidance on how to go about it. All right?
All right, thank you. So Mrs. Chioma has said yes, that she's talking about people living and working in the UK. So Mr. Olubune.
Okay, thank you, Chema. So for people who are living and working in the UK, of course, they would be liable to tax based on where they are resident, right? I think I had mentioned earlier that because for Nigeria, the residency rule is what determines how you're taxed in Nigeria. So as an individual, if you do not live in Nigeria, right, you would not, even though you're Nigerian elsewhere working, you will not be liable to tax in Nigeria. So someone who is living in the UK, earning in the UK, definitely would have been subjected to tax in the UK. So if the person probably then sends money home, because I saw you said, you mentioned personal transfer. So if he sends money home, maybe to family, to friends as gifts, right? So that would not have implication for tax, as long as the recipient in Nigeria can prove that this is, just actually a gift from a relative and whatever. So is that, clarification the tax authority would insist on. So as long as they are sure this is a gift, there will be no implication. So if, for instance, maybe the person is repatriating investment income from the UK, like I mentioned earlier, and sending it in through the bank, is not liable to tax, right, in Nigeria. So it depends on the purpose of that transfer. So that's what will determine how the tax will flow.
All right, thank you
Yeah.
very much, Mr. Olubune. So I think that's all the questions that we have for today. Thank you so much, Mr. Abiola, for this platform. Thank you, Mrs. Oluwatoyin, for your insights that you've given today. Thank you, Solubumi. Also, I'd like to thank everybody for coming on board from our busy schedule. As we've heard today, thriving in Nigeria's reset economy requires agility, understanding the new tax landscape, funding growth smartly, and making the right strategic moves. So just to help you apply to these lessons, Midreach International will be inviting you to our end of the year strategic retreat for founders and business owners. At this retreat, you develop a 2026 growth strategy tailored to your goals, build quarter by quarter profitability plans, align your structure with new tax and funding realities, and also connect with seasoned advisors and also founders. So just like a space to collaborate, aiming for the best that 2026 has to offer. It's at a very small price, it's at 100,000 naira, and we have limited slots available. We'll also be sharing the link on the chat platform so that you can register for it. Once again, I'm Gabriel Agofre, and I thank everybody for joining us for this session. Have a lovely day. Stay strategic, stay forward thinking, and see you at the retreat.
Thank you so much, everyone. God bless you. Thank you to our speakers.
Thank you.
Thank you for the
Thank you so
insights.
much.
Thank
We
you.
appreciate your time.
Thank
God
you.
bless you. Bye, everyone.
Bye.
Bye, everyone.
Bye. Please, can you answer if the payment admits only one? Okay, one. Thank you.
That's
Thank
no
you.
problem.
Bye.
Bye.